Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by these great sponsors. Axon started out of a passion for keeping agriculture moving. Imagine having 100 years of tire and wheel knowledge in your back pocket the next time you sell a piece of ag equipment. To find more or become an Axon dealer, please visit axontire.com. This podcast is also brought to you by Valley Transportation. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransinc.com for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is also brought to you by Ag Direct. No matter how you buy your ag equipment, from a dealer, auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving Iron.
Hello and welcome to Moving Iron Podcast, Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon has a great deal for you, Shawn. I'm sure down with it being so warm this time of year in Florida, you wouldn't mind having yourself a nice piece of cold steel in your pocket, wouldn't you?
I think it'd be something like hotcakes down here.
Well, if you want one of those pocket knives that the Axon is giving away from the Alliance Tire Company, send an email to marketing@axontire.com with all your details and tell them Moving Iron sent you, and they will send you one in the mail for free. So just go to marketing@axontire.com and they will send that to you. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransinc.com for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And finally, no matter how much you buy equipment or where you buy it from, Shawn, if it's a dealer, auction, or a private party, Ag Direct can help you finance. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Shawn is with Hackett Financial from Boca Raton, Florida, and he is kind enough to come on a couple times a week to talk about what's happening in the marketplace. So, Shawn, let's do this first. We had a pretty big reversal yesterday in the market. Everything, wheat was going limit up, went limit down yesterday. Corn was down 20-some, soybeans were down, everything was down. Everything went the opposite direction. I'm sure a lot of that was profit-taking, but there's also some news about Ukraine and Russia getting together and figured out a ceasefire. That obviously didn't happen last night. Inflation report came out this morning. We're at 7.9% inflation year over year. So a lot of that's weighing on the market, and then the outside markets too are also going crazy because the price of oil fell out of bed yesterday as well too. So I guess just brief recap of what you saw happen yesterday and your thoughts.
I think we have to separate what part of the move is a fundamental move, what part of the move is a money problem. Meaning when you get the nature of a blow off top is it rises initially on a fundamental change that is warranted, and it ends with an irrational trade, meaning that you're overdoing the worst case scenario, but it becomes a margin call problem, a money problem. Like we talked about the nickel market, this entity losing, was it $8 billion?
Yeah.
Because they didn't get out in time and that sort of thing. It becomes a money problem. And once the money problem gets rectified in some way, all that buying that was not buying because of fundamentals, they're buying because they didn't have a choice, comes out of the market. And I think yesterday might have been the first stage is showing that those that were caught on the wrong side that had a money problem, we might be getting that resolved, and we might get these markets back into a calmer period and maybe a little bit of a lower period that better reflects what the true fundamental situation is. And of course, we're going into the growing season here in the Northern Hemisphere. So I think that's what's going on. And that's the nature of a blow off top. Blow off top is when that happens, and then you come back down, and then you kind of calm yourself for a little while. And I do think we're in the process of taking some, especially wheat and crude oil, classic money problem blow-off tops that likely have been made, and now we just have to decide how low do we go to get prices back to what I would consider to be more of reality on what the true different scenarios fundamentally are.
Okay.
So
makes sense. All right. So we had a question from a listener come in all the way from France, a matter of fact. So Francis from France, he sent in a question for Shawn. And Shawn, we hit on this, I think, a couple times since we've been on the podcast together. But he said he heard Shawn say a few weeks ago that he was expecting a price spike in cocoa because of anticipated weather factors in West Africa. Really, I think he's asking, is that still what you see happening? And then could you provide a further update and explanation on this topic?
Well, we have a long-term view that we're moving away from La Nina. In fact, we believe La Nina will literally disappear probably by April, at the end of April. And then we're going to move towards an El Nino upper airflow pattern by the fall end of the year. So this is we're transitioning, okay? And West Africa is very, very correlated with El Nino brings in drought, La Nina brings in a lot of rain. So historically, if you look at El Nino periods, they tend to produce poor crops in West Africa. They tend to provide worries over supply, and they tend to provide periods where the cocoa price has to reprice higher based upon that shortage of supply. And of course, given that West Africa in aggregate produces about 70% of all the cocoa in the world, what happens in West Africa doesn't stay in West Africa. It impacts the price pretty significantly. So we're not really what I would call at the mission critical point yet, Casey. We're actually already developing a dry pattern, but the real critical growing phase for the cocoa crop is the main crop. So if you look at the blooming and the podding, pod setting for the main crop in West Africa, it's the period from May through August is most important. So we have developed a West African drought algorithm that kind of goes over 5 or 6 of the important different natural climate cycles that we follow that have been associated with severe droughts in West Africa. And we're going to be looking for that indicator to kind of move into more of a drought-prone phase as we get into May. So I think where we're at now is we're in the early stages of developing this weather pattern. And in the meantime, the cocoa price relative to all the commodities is the cheapest in 50 years, where everyone's coming off of the COVID restrictions. And so overall, we think that the demand side picture looks better. And 2 to 3 years of lack of investment in West Africa in the cocoa tree crop means that we're going to have a difficulty turning this supply around as this weather becomes more adverse. So I think that's the longer term story. So I would say, depending upon your time horizon, if you have a longer term time horizon, cocoa looks interesting right now. If you have a more of a shorter term time horizon, you might want to look more during that critical May through August timeframe. And obviously, Casey, we'll be updating everyone as we get closer to that timeframe what our drought cycle, West African drought cycle algorithm is saying, like we did with Brazilian frost. And we had developed a Brazilian frost algorithm. So far, all the things we're looking for are moving in that direction. So that story remains intact, but we're just not quite at mission critical yet.
Right on. Okay, so on Tuesday we talked about oil and the effect it was going to have on renewable fuels and what that looked like. So we're going to talk about that a little bit right now. So we have yesterday the Indian stocks report came out yesterday, You act like you think I would have remembered that. The ending stocks came out yesterday talking about what's going on there. Obviously, they had some concerns about what's happening in Brazil and South America, like we've talked about quite a bit here on this. And then we start looking at the prospective acreage report will be coming out here pretty quick. And also, when that comes out, there'll be a supply and demand report that comes out as well, too. So kind of coupling all that together, start looking at the price of energy right now and what that looks like. Soybean crush across the world has been at record highs. Palm oil has been at record highs. The amount of sunflower oil that's going to hit the market is going to dramatically drop because of what's happening in Ukraine right now. So you couple all that stuff together, then you throw biodiesel and corn crush for ethanol on top of all that. You start looking at some pretty significant things start happening when it just comes to vegetable oil and just in general, not necessarily biodiesel or anything else. So talk about that market a little bit, Shawn, and what you see happening there.
Well, there's a real battle going on. I mean, we have the politicians that want to get food prices down, and they think one way to do that is to walk away or soften the mandates on ethanol production and on renewable diesel production. And they're talking about the same things in India, in Indonesia, where they are utilizing a lot of the vegetable oil and the various crops for this alternative energy production. Yeah, at the same time, there's another constituent that wants to use these products because they're more environmentally friendly for those that feel that reducing carbon is important. And then you have a third constituency that says, given how high energy prices are, ethanol actually makes gas cheaper. And renewable diesel would actually make things cheaper because you can produce it and it actually lowers the price. So we should continue to push these, alternative fuels. So it's really hard to know how all that's going to play out. My suspicion is that food prices are probably the most important thing for most countries to deal with, meaning that people can ride a bicycle, instead of a moped. But feeding your family, if you're not able to do that, then you go after the people you feel are to blame for why you can't feed your family. So I think in the end that what's going to win out is to reduce short-term the mandates on these alternative fuels to attempt to get some of these food prices down. Whether that's actually a good policy or not, whether it actually works or not, but I think the governments around the world are starting to get more vocal that that's what they want to do. And my suspicion is if things continue to escalate, Casey, with issues with the growing season, we might see the politicians pull those levers, and that could create some selling, in the grain markets, for example. If people are worried that maybe the demand that they're anticipating for bean oil, they're anticipating for corn-based ethanol, has to fall off, and they have to shift the balance sheets here a little bit.
Okay. All right. So specifically looking at crop mix and what that looks like, because when I look at it right now, I mean, obviously farmers want to plant corn, and that's something that they do. United States farmers plant lots of corn and those kind of things. But if you're looking at it kind of almost like a sure pipeline bet, it seems like to me that soybeans would be more towards that bet right now, especially with the crush rates that we're seeing right now and the need for vegetable oil. Do you feel like coming up, in this prospective acreage report coming up, I mean, obviously it's watch the left hand and the right hand is going to go do something else type of thing. But when you're looking at that soybean mix, do you feel like soybeans have a really good case right now to plant more acres in corn?
I think in certain areas they do, Casey. I definitely think it's really location specific. But if I'm looking at the core grain belt, and I'm looking at the economics for corn, and as you said correctly, Casey, the strong inherent desire for U.S. farmers to plant more corn if it pencils out. The consensus right now is that the corn acres are going to be down a lot and the soybean acres are going to be up a lot. My all the years that I've been looking at grain markets and ag markets for the last 30 years, typically a widely anticipated consensus rarely turns out to be correct. Usually the consensus turns out to be wrong. And I kind of have a sneaky suspicion that the corn acres are going to surprise to the upside, meaning we're going to plant more acres than the market's thinking we're going to do, and that we're actually going to plant less soybean acres than the market's thinking that we're going to do. I also think this, Casey, I think we're going to plant more acres overall than the market thinks we're going to do in everything. Meaning, when you look at the total number of acres that we're going to plant, I think we're just going to plant a lot more acres than anyone thinks we're going to plant. So while I just said what I said about corn and soybeans, it doesn't mean that necessarily those numbers are bullish or bearish. It just means that based upon current expectations, I think corn could be higher, beans not as high, but I think the total acres planted is going to be higher across the board, meaning if you took cotton and rice and wheat, spring wheat, and the whole thing, we're just going to plant, we're going to try to plant a lot of acres. So I'm thinking, there might be a bullish surprise on the soybean acreage. And I'm not one that goes out and tries to bet on these reports because I never know what the USDA is going to say anyway. But I just have a sneaky suspicion everyone's leaning towards less corn, more beans. And I just feel the corn price is at a level that I think on the margin, enough farmers have bought in their fertilizer early enough, cheap enough, where they didn't have to chase these higher prices. I think they're going to plant more corn than the current market is giving them credit for. That's my suspicion. It's total speculation, but I think that's what I would be looking for, a corn acreage surprise, meaning more acres than not, based upon the current feeling. And that's that's just my gut instinct telling me what I think is going to happen. So
okay, so if when that report comes out and it's a horrible market or horrible report to trade on, I mean, because it's rarely is it accurate, but you start seeing, okay, all of a sudden the report comes out and says, hey, you know what, we're going to plant 2 million more acres of corn, and we're going to plant 2 million less acres of soybeans. What do you see? What effect is that going to have on the market, in your opinion?
Well, the soybean market needs more acres. So if that was what the report said, we would clearly and immediately have to change the ratio of new crop beans to new crop corn, and immediately tell any farmer that's on the edge that can still change his mind to do so right now, please. Mm-hmm. And you would get a violent, quick, and swift reaction to whatever level the market believes is enough to switch that acreage balance around so that it works out better. Then, of course, once that's done, and that would be done like within a day or two or three, like it won't take long to reprice those markets if that's what the number says. Then once that's done, then it's all about Mother Nature.
Right.
Is it a good early start? Is it a good planting season? Is it not? What are the conditions? And that will ultimately determine, whether the market has it right or not, or whether the planting intentions is right or not. As you said, rarely is the planting intentions report turn out to be what the actual acres planted is at the end of June.
Right.
But certainly, I think what you just said in terms of a bearish corn report, a bullish soy report, whether it's 2 million, I don't know, but I think that's what I'm anticipating is going to happen based upon the current consensus. It's just too many people think that this is a guaranteed report to be bullish corn, bearish soybeans, and I'm thinking they're probably overplaying that a little bit, and we need to be ready for that kind of a trade. So
okay, all right. So from a competition standpoint, so you take a look at states like Kansas, Oklahoma, western Nebraska, western Dakotas, Montana, those areas like that are fringe areas for total, like from the overarching corn and soybean production anyway. And then you start looking at the price of wheat, for example, spring wheat and those kind of things. How do you feel like, though, in those acres where you see where wheat could have a better play, do you see wheat acres being picked up in those areas?
Yeah, the fringe acres now are different. Now, what we just talked about was the total acres. But the fringe acres, which are your Dakotas, as you just said, the western belt out there, I do believe you're going to pick up wheat acres, and I do believe you're going to pick up soybean acres. I believe you're going to pick up oats acres. I think you're going to get some of those alternative crops that when you're looking at the prices of some of these things, it pencils out pretty good. So yeah, I think in those areas you're going to see a pretty significant differential towards these other crops and away from corn. But I don't believe that switch is going to be meaningful enough for what I believe is going to happen in the core corn belt to deliver on the current consensus estimates right now. I guess that's where I'm coming from.
Right. So as you take a look at even in areas like cotton, how's cotton playing in that? We saw cotton fall off pretty good yesterday. I listened to your report that you put out 2 or 3 days ago, talking about your concerns with cotton, what that looks like. What's your thoughts there right now?
Well, I would hope and have to believe that most cotton farmers have done something by now to lock in an extremely attractive new crop cotton price. I would imagine they probably have or have done something to make sure that they've locked that price in. It's going to be very, very hard, Casey, for a cotton producer that's all geared up to produce cotton with the equipment and the infrastructure you need to produce cotton, that they're going to go switching to another crop. It's just too profitable for them to do so. And I think that I would be looking for more cotton acres, despite these other crops being attractive. I believe, once again, in the Deep South, they want to plant cotton. They like to plant cotton. They're geared to plant cotton. If they can get a price that more than pencils out on paper, they're going to plant cotton, and probably as much as they possibly can. So I think cotton acres will be up. I don't see that being a crop that gives up, that goes to some other crops this year.
Right on. All right, so long term, looking out past 2022 into 23 and what that looks like, how do you think this renewable fuel story plays out?
Well, if we have a spike trade here over the spring, early summer, based upon weather worries in the northern hemisphere, Casey, and we ratchet up the fear, the food shortage fear even further, I do believe that the politicians around the world will pull the plug on some of this renewable fuel mandate. So that, I think, is a story that happens, let's say, from spring, and maybe they hold on to that into the end of the year. And then if prices do come falling back down, and we get good crops, and we start to put this genie back in the bottle, we get an El Nino pattern, which is much, much better for growing crops, then I think they'll go back and put them back on. So we might be looking at a great story for renewable fuels in 23 in terms of demand, but we might be looking at a disappointment in renewable fuels because they're going to pull the plug for the back half of the year, and maybe a lot of the demand side expectations that are in the balance sheets have to be pared back. That would be my best guess at this point, looking at the climate, the political climate that we're looking at right now.
Right on. Shawn, good stuff as usual. Folks want to reach out to you and get more information about what it is you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, HACKETT, advisors.com. Lots of information on there that talks about our smart money algorithm, natural climate cycle algorithm, and a lot of other things to see if what we do might be of value to your listeners.
Right on. Well, Shawn, appreciate you being on the podcast, man.
Thanks, Casey. Love to do this every week. It's wonderful.
Well, I'm glad that you do. So that makes my life easier. I appreciate that. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. And you can find all the information there. If you would like to get more information about the Moving Iron Summit coming up in Nashville, Tennessee, make sure you check out the Moving Iron LLC webpage there, and you get all the information as well. Also, you can find all the podcasts and blogs there as well. So with that, I am Casey Seymour, Shawn Hackett. Let's move some iron, folks. Out. Axon Tire is going to have more tips, tricks, and client advice throughout the year, and in September at the Moving Iron Summit in Nashville. If you're looking to sign up for the event, please head over to MovingIronLLC.com. We hope to see you there. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransitinc.com for all of your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy ag equipment from a dealer, auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Moving higher. in the 21st century.